Hello, everyone, and welcome to another episode of the HR Plug. I am your host this evening, LaShawn Davis, owner and CEO of the HR Plug, and we are an HR consulting company that focuses solely on workplace culture. We help businesses and leaders understand the importance of valuing the people who keep their doors open, the employees. And we also help employees understand how to advocate for themselves and truly control your workplace experience. So I thank you for being here tonight, following the show, being an active participant in this conversation. As you know, we bring you topics that are relevant to you and things that will help you thrive at work or in your business. So as you hop on and join us, be sure to drop a comment and say hello. Let us know that you're watching. As you know, tonight we're going to be talking about taxes. Taxes. So, we have an expert with us tonight who I am excited to bring out here. And I know that you guys are just going to love her. And I am excited that we're going to be talking about something that can potentially help you save money. So we have Victor in here. Hi, Victor, Coca Photography. How are you? Thank you so much for joining us tonight. Listen, if you have any questions as we go through the show, be sure you drop them in. Before we dive into the topic, I definitely want to let you all know I went to a summit today. You may have seen it on my social media that I was at a Woman of Color and Business summit that was hosted by Talia Wajid, and it's a part of her natural hair show convention that's taking place this weekend in Atlanta. So if you have not purchased a ticket to that event, you really need to get there because it's more than just about hair. It's about business. And I had an opportunity to meet her, and this is not a sponsorship. She's not telling me to say this. She probably is not even going to know that I'm saying it. But I see her passion behind what she's doing, and I want to encourage you all to go over to naturalhairshow.org after the show and take a look at what she's doing. The tickets are only $10. $10 this weekend in Atlanta, and it's going to open your eyes to a world of talent, a world of entrepreneurs and business. They're going to have panels, they're going to be having live shows, entertainment. It's just an opportunity for you to network. If anything else, go out and meet other people who too want to meet people like you. So I wanted to share that with you all because while I was there, there were some people who were saying that they really appreciated the session that I did. And I said, okay, that's great. And they said, I wish I could speak at events or be guest on podcasts to promote my business, because we have a lot of people who still work in corporate America and they are also trying to pursue their own business at the same time. So I said, well, why can't you? And she explained to me that her company has a policy that says that she's not allowed to engage in any activity that aligns or is similar to what she does now. She can't represent the company in that capacity. She doesn't even really want her company to know that she even has this business. So it makes it very hard for her to gain experience and share the knowledge that she has and she knows because of this red tape that the organization has around her ability to be free. So I remember that does exist in corporate America. And I think that should change. And I want to encourage leaders who are watching this, leaders in C-suites who are watching this or who might hear this, listen to this message. Do not silence people from speaking about what they do or who they are just because they work for your organization. I get it. You don't want them to use your company name, then say that. But don't stop them from taking advantage of an opportunity that could work well for them because either you're afraid to lose them or because you don't want your company name in harm or in jeopardy. So make a provision that says if you speak on behalf of yourself. You don't say where you work, and stop blocking their opportunity to grow or blossom or even be seen or heard by other people. It's something that we got to stop doing because true leaders build leaders and create leaders. And so if you're stopping or stifling someone from truly living in their purpose because they're enslaved to you at the moment because they need a check, then you're really not leading, you're dictating. So, the tip for the day is if you know that someone on your team or someone in your organization has a long term goal to be a speaker, or they wrote a book and they want to be able to talk about it, but your policy prevents them from doing so because they work for you, consider changing that and give them an opportunity to have a voice and find their own space in the marketplace. All right. So we've had some other people join us. We have Oceana on here. Welcome to the show. And Victor says, great job speaking today. Thank you so much, Victor. Appreciate you joining the show. And then we have the VO Davis group. Hello, welcome. That's my husband, Victor, too. So thank you for being here. So I'm going to get ready and jump in tonight to have Gwen come on and meet with us. So I'm going to have her come out here and introduce herself. How are you this evening, Dr. Gwen?
Hello. How are
Thank
you?
I am well. Thank you for being here. So
Thank you for
excited to have you.
thank you for having me. I appreciate it.
Yes. Listen, you guys, if you don't know her, you will know her by the end of the show. And you will also go download her app on the Roku app, her channel on the Roku app, because she is someone who really pushes and supports everybody else's business, whether it's helping them with their taxes, achieve the best amount of refund, or stay out of trouble with the IRS, or whether it's just helping you pursue your passion by using her several platforms that she has because she's also a media mogul. And so we're honored, Dr. Gwen, that you are here and able to share some jewels with us tonight.
I can't wait to get started. I thank you so much for having me. I appreciate
Yes.
it.
So we have Terrence here. Hey, Terrence. Thank you for that. So I know there's a lot of swirling questions out here because we're talking about taxes, and taxes are something that a lot of people are afraid of probably because they don't understand it. And I know tax season just ended. So you're finally able to catch your breath. And I snagged you right on the next show, right after that. So, first, let me allow you to introduce yourself to our viewers. Tell us a little bit about yourself, what you do, what you love about what you do. And then we'll hop into talking about what are some tax lessons and tips that you can share with us tonight. So first, who is Dr. Gwen?
So I am a serial entrepreneur, tax strategist, and media maven. I've actually been an entrepreneur for the last 17 years. My first business was my income tax business. And from there, I just expanded into probably too many other businesses. Okay. But ultimately, all of my businesses revolve around the same thing, which for me is to inspire people to, of course, reach for their dreams, let them know that nothing's impossible as long as you believe, and also to educate. Education is very, very important for me, for entrepreneurs and small business owners, and just to serve my
Mm,
community, to serve small business owners. Like every business that I have, those are the things that I try to do. So
I
that's a
mean, you
little.
do. You don't even try. You are doing it. Serve is the best way to truly describe you all. The way I met Dr. Gwen is I was actually a guest on her show. And she believed in me when a lot of people didn't even know who I was. And she gave me an opportunity. She gave me an opportunity for my voice, my story, my business to be amplified. So I'm grateful now with my podcast. I'm able to give her an opportunity to celebrate her and do something for her because she's always doing something for other people. So that's Dr. Gwen. She's here tonight. And now we're ready to jump into taxes. You ready?
Ready?
All right. So, like I said, tax season just ended. So, let me just ask this question because I'm sure everybody's wondering what was the biggest issue or mistake, the most common mistake that you saw being made when it came to small business filing their taxes this past year?
It was so many of them.
Wow.
It's so many of them. One, small business owners not paying any taxes whatsoever to nobody. As small
Mm.
business owner, we have too many small business owners who are making good revenue and they're not paying any taxes. But not only are they not paying taxes, they are not keeping up with their expenses so that they're not paying taxes and they're not being taxed on the right amount that they should be taxed on because they haven't done good record keeping.
Wow. Okay. So, when you say they're not paying taxes, so I have a business and I'm selling t-shirts. So, I sell my t-shirt, I get the money for it. What should I be doing when I get this money so that I'm paying my taxes properly?
So what you supposed to do as a small business owner, even if you're an independent contractor, like a gig economy worker, like somebody who drive Lyft or Uber, you should be paying your estimated taxes, your quarterly taxes every quarter from the revenue that you made from your net profit. Because ultimately, unless a lot of small businesses do have business losses, and sometimes, especially when we first started in business, we're spending more money than we're actually making. But a lot of times you don't even know that because you're not even keeping good records, so you don't really know. So if you don't
Mm.
know that, then you definitely should be paying estimated taxes just in case when it comes to the beginning of the year and you do your taxes and you start and putting your numbers together and you actually had a profit. Well, you didn't pay any taxes during the year, so now you got to come out of your pocket.
Mm.
And in some cases, you might not have it now.
Wow. So, you should have an account with the Department of Revenue, you're saying, and every quarterly, if you don't keep records, you need to be approximating how much money you made so that you can report that and they can tell you what taxes you owe. Is that right?
Exactly.
Wow. Well, that's good to know. So if you are listening or watching and you're not reporting any of the money you're making, you may want to go set that account up and do that. So is every small business required to do that? Meaning if I don't sell a physical product, let's say I do a service like coaching or something to that effect, should I still have an account that I'm reporting the income I'm making from those types of things?
Absolutely, because if anybody who makes a net profit over $400, you're required to file taxes as a small business owner. So even on $400, you still have to pay something in taxes. So you need to make sure that you're paying something quarterly. But a
Wow.
lot of times, small business owners don't know where to pay it, which is easy to pay on the IRS website. Select estimate payments and you pay them every quarter. A lot of times we don't know how much to pay. There's not a set amount to pay. They do have a form 1040 ES where you can try to do the calculations to try to do the best calculation that you can to figure out how much to pay. But the
Mhm.
rule of thumb is, to pay 20 to 30% of whatever your revenue is.
Wow. And so if I'm paying that every quarter, by the time I file my taxes with you, you will tell me if there were exemptions, and that's how I could potentially get some of that money back if I overpaid.
Absolutely. So that's exactly
Okay.
how it works. But this is the thing too. The estimated payments, it can be looked at in different ways, but a
Mhm.
lot of times for self-employed people, the estimated taxes are your Social Security and Medicare taxes. So those are the taxes. Remember when we work for a job, those
Mhm.
ones we can
Came
adjust.
out.
right? So as a small business owner, you have to pay those things as well. So if you're not keeping up with your books during the year, yes, if you have overpaid, then once you deduct all your expenses and the amount that you pay, the taxes on is not the exact amount, then of course you'll be able to get some of that money back. But
Mm,
good record keeping will help you to avoid, overpaying and underpaying.
got you. So tell us, what is good record keeping? What should I be tracking, keeping, and how long do I need to do it for?
So, you need to track your expenses and your income really daily, monthly. If you're not doing it daily, then you should do it monthly. You should track any expense that is ordinary and necessary for you to operate your business. And that could be anything from, did you advertise this month? Did you have to utilize your cell phone for business this month? Did you have to utilize your internet for this month? Did you have some subscriptions like ClickFunnels, a
Mm-hmm.
Canva, any type of app that's on your phone that you need and utilize to make your graphics for online? Did you have any of those things for this month? Then you need to be keeping track of how much money are you spending out on those particular things. And you also should be tracking how much money came into your account. So I use my business for an example. I take my income and payments from my clients several ways. So I have bank products that I offer for tax preparation. I also take cash. I also take checks. I also take PayPal. I also take Square, right? So for all those different payment methods, then every month how much came in from those different payment methods, so that I know how much I brought in for the month. And it's basically
Mm,
saying, okay, how much did I spend out? How much did I bring in? And did I have a net profit or did I have a business loss for that month?
that's a lot of record keeping, but I
But
get it.
a lot of times it's easy because you have things like QuickBooks. Like if you don't want to keep up with all those different things, by hand, or trying to keep up with
Mm-hmm.
it, then you can easily like use an app like QuickBooks and connect
Mm-hmm.
your business bank account to it and categorize the things, and then it'll do it for you if you long as you use your
Okay.
business bank account.
So that's a good tip. If you don't want to do it old school manually with an Excel spreadsheet, look
Right,
at look at your QuickBooks or whatever you use to process your finances or send your invoices or what have you, and see if they have a plugin or a way to track that for you as things are deducted from your bank account. And you may not have to do that manually, but it's important to do it because that's the only way you'll really know if your business is profitable, from if I'm
right,
understanding you.
right.
Wow. So it doesn't matter this client paid you $1,000 if you paying $2,000 for your website, your phone, your Canva, your all these other things. You don't know because you're not tracking. Wow, that's okay. So record keeping.
Right. And a lot of times, and that's the funny part, a lot of times people, they be in business, they be like, oh, I'm making so much money. Oh, I made six figures, but how much did it take you to make that six figures?
Right.
We don't know because we're not keeping track of what we're spending
Mm,
out to generate the
wow.
revenue that we're bringing in. And that's an important part of being a business owner that unfortunately a lot of us skip over.
Mm. And we could be leaving money on the table too, on the flip side of that.
Right. Mhm.
Wow. So, okay, now you heard it from the expert. Find a way to keep records of your business spending because it's truly the only way you're going to know if you're making money. And your tools that you use, though, like if you use QuickBook or something like that, it might be able to help you do that. So definitely look into that. And we've also learned, report your earnings quarterly at least to the Department of Revenue, and approximate your taxes if you're not, approximate your income if you're not keeping records of it, so that you have some sort of way that you're paying now to avoid having to owe later. It's a good recap so far. Wow. Okay, so now let's jump over to the employee side for a moment. All right. I'm a new hire, and everybody knows I go and I fill out my exemptions. What are is that how many kids I have? Like, what are exemptions? How do I know what number to put there, and what does that number really mean?
Oh God. All right. So that's probably was the biggest thing that went wrong this tax season. So many employees not having enough taxes taken out of their withhold I mean, out of their income, and so many people
Mm,
owe taxes this year that never have before. So
mm,
what is exemptions? Exemptions is how many people are you pretty much taking care of? Like, how many people
mm-hmm.
are you taking on? That's a good way to look at it, right? Or how many people are in your household that's going to be on your taxes that affect your deductions, right?
Okay. So that you
Um,
claim.
right. And that's just a good way to explain it. So if you put too many assumptions on there, which is what a lot of people do, then that's the less amount of money they're going to take out of your paycheck, for
Mm,
taxes. The less assumptions you put on there, then the more they'll take out of your paycheck.
paycheck.
So what ends up happening is, one, people need to know how they're filing, right? They
Mm,
definitely need to know their filing status and how they're filing, because a lot of times, they married couples are real bad at it. You end up not filing with your spouse. You go file one place, they go file one place. Y'all ain't told nobody y'all married, and then but when you filling out your W-4, you're married. But
mm,
and then it's like now you haven't had enough taxes taken out because you didn't file your taxes correctly. So that's one thing. And then it's about people reading the W-4 form, because one thing that I seen most commonly was first of all, we have a new W-4 form. For years, we've had the same W-4 form, to where you go in, you pick a certain amount of exemptions that you want to put on, and then you put that number on there, and then that's how much they're going to take out. Well,
right.
the W-4 form has been updated since 2020. It's a new format. And with that W-4 form, is more of a calculation type thing. Like, you have to do a little math to get your exemptions or the amount of withholdings out to be correct. So on the new W-4 form, you answer what your filing status is, and then the next question they ask you is, are you married, or do you have more than one job? It seems like
Mm,
everybody skips that question, right? And then
mm,
they have another job, or they have a spouse that has another income. And what happens is another thing with especially married couples and a person who had more than one job, you forgot to indicate to that job that you had another income, so they're not taxing you the way they should tax you.
mm.
Because
Wow.
when you're married, and married couples be like, oh, why do I always owe? Because you're not filling that W-4 form out properly. Because when they're withholding taxes from your paycheck, they're only withholding enough taxes for the income that you're making. But when you go
Mm,
file your taxes, if you have another job, you get retirement, you get Social Security, you have a small business, you have a spouse, then that's more income that you would have. And the higher income you make, the more you're taxed. So what
mm.
ends up happening is, when they come file their taxes, you have more income, but you only pay taxes.
Reported for it. Wow. Woo. So let me just recap this. It's the HR in me that I always like to recap, make sure I understand. However you file your personal taxes is what needs to match what you put on your W-4 form. So if you file head of household for your taxes, don't put married on your W-4 form, because that's what determines the amount of money they withhold from your check based on what you put on the W 4, not how you file your taxes. So they need to match because a lot of times when they don't, we're not paying enough taxes because either we have another source of income through a spouse or another job that we haven't reported. So it's important if you have another job or a side business and you still work in corporate America that you are indicating that on your W form. Now, can I go update my W-4 anytime?
In most jobs, you are able to, yes.
Okay. It's
But
okay. So, because I feel like it's some people feeling like, oh, I need to go to HR tomorrow to update my W-4.
right, but it's also the problem that we commonly see where people update it too much. It's
Mm.
like playing tic tac with it. It's like, okay, I'm gonna be a paycheck because I did some overtime this week, so let me go in and make an adjustment,
So
and
I
then
can
we
bring home more.
right, right, and then
Okay.
we forget to go back and change it,
Change.
or we don't did it a little
Mm.
bit too many times during the
Mm.
year, and we like, oh well, I ain't do it, but like 3 or 4 times. But if you're a single taxpayer, 3 or 4 times will make you if you're not
Mm.
careful.
So let's not. So the W-4 form isn't a way to get a pay advance or anything like that. Don't adjust because you want more money. You're playing a dangerous game, a slippery slope, because your exemption shouldn't change that much
Right.
with that intent unless you get married 5 times a year and divorced 5 times a year, you know? But that's a good call because I think some people think about the immediate. I need more money in my check. Let me go say I got 9 exemptions, and then they ever change it back, and they end up owing money in the end. So the goal is to just end even, not to receive or not to owe.
I mean, it's. I made a post on Facebook and it went viral because he was mad at me because I was like, yeah, a lot of people who make money, we don't have like a lot of deductions, but that's not the reason why you're not getting a tax refund. And it's because ultimately you decide what you want for your tax situation. Like some people don't care about a refund. They just care the fact that they don't want to owe at the beginning of the year. So if that's the case, then you can make adjustments to your W-4. It's gonna be you trying to get like right down to the knit as
Mm-hmm.
far as what your different deductions are for the year to avoid from overpaying, but that's possible. It depends on your
Mm.
choice. Some people want a lot of money withheld from their taxes because at the beginning of the year they look at that as their way of saving. Like some people are not
Mm.
disciplined to put money in their bank account and don't touch it. So they might want to um play with their withholdings or overpay so that at the beginning of the year they can, have a big refund. Ultimately, it's your decision how you want your tax situation to look, but you have to actually do the things that are necessary for it to look that way. What we
Mm.
tend to do is we like to play Russian roulette with it, and then we don't know what the end game is. And when the end game comes where we have to owe, then we're looking crazy because we're like, why? Oh, I ain't gonna pay them. I don't want to pay them, but you chose to not pay them
Right.
during the year. And so that's just that thing that people kind of need to understand. Like it's to me, it's not no right or wrong way. It's just what is your way. Some
Mm.
people are rather, don't pay no taxes during the year and they want to see their money. And they might put some into the side to pay them at the beginning of the year. It's up to you what you want to do. But ultimately, unless you just know a whole lot of tricks, like our previous president, you
Yeah.
have the tax, you have a tax liability. Like
Yes.
when you make income and a lot of times you're responsible for owing some type of money to the IRS. Possibly not everybody do, but a lot of people do, and you just got to know to make sure that you take care of that tax
Mm.
liability.
Right. So the goal is just not to Oh, at the end, right? So whether you decide to pay it along the way or pay it at the end, you just want to make sure you're tracking it and you're keeping on top of it in a way that works best for you. But it's definitely like a game of Russian roulette, like you said, because if you're not on top of it, you could forget, and then in the end, you're like, I owe what? How much? So that's so good. So W-4 forms, make sure that whatever you put on it for your employer, married, single, head of household, number of exemptions, and all of that, matches what you put on your tax return. If you put single on your tax return, your W-4 should reflect single. If you have more than one job than your corporate America job, let's say you have your own business as well, make sure you indicate that on your W-4 so that you're properly taxed and not double taxed, right? Because if you do two double W-4 forms for two different employers, let's say you have two jobs, could you be double taxed in a sense because you didn't tell it you had two jobs?
Can you be double taxed? It's a possibility. It just depends on, again, what's on that actual um W-4 form,
When they fill it
because
out.
yeah, right, because you might not want to put that you had a business on a certain on you got two jobs on both of them, because then you might have too much money taken out. So again,
Mm,
it's just those different things that you have to kind of look at.
that's
They have
true.
charts and calculations to help you come up with those different figures, or what possibly
Hmm.
might be a good amount to be actually taken out per
Right.
pay period.
So, what makes someone exempt? Because that form also has exempt from paying taxes on there, and I've
Mhm.
seen people check that, and I'm just like, what makes you exempt? But I'm not we
I
don't we're not tax professionals. So,
as
what
a
makes
tax
people
pro,
exempt?
as a tax pro, I don't know what makes you exempt. Like,
Yeah.
I mean, maybe that's not my area of expertise,
Mm,
but most of the time, when people go exempt, unless they have low income and they have some dependents
mm,
that's gonna offset that, where they don't end up owing, then most of the time they end up owing. You just
gotcha.
like, I don't know nobody that went exempt that, and I even say that they don't, because like I said, if you have deductions, because or you're qualified for certain tax credits, you can go as
Mm,
all year. It just depends on what your income is. So
it just okay. Okay.
everything is,
Depends. But
yeah.
don't check that just because you feel like I'm exempt because I don't want to pay
Right,
taxes.
right,
Just if
right.
you are checking exempt, then just know why and make sure it applies to you. So, what about students that are still dependents on their parents' taxes? If I get a job while I'm in college, is that student still supposed to file taxes on that if they're a dependent on their parents?
Absolutely. So, um, a lot, if your dependent is under the age, is 23 and under, well, let's say 23 to 19, right?
Mhm.
Um, well, let me say 19 to 23. Let me say it the
Okay.
right way. They're between the ages of 19 to 23, and they're a full-time student, and they're working, and they're just temporarily away from their parent, then they are still considered a dependent on their parents' tax return. Now,
Okay.
in some cases, depending on how much income they made, they possibly may not need to be a dependent, but it also depends on whether how much of their income is they put in towards their total cost of living. Right.
Mm,
That's really
mhm.
what it boils down to, for you to determine whether or not their parents should claim them or not. Because you might have some college students who they pay for everything that it comes for, them providing care for themselves, and
Mm.
their parents don't pay for anything. In those cases, their parent
Should not be
shouldn't.
claiming them.
Right.
Wow.
But in a
Gotcha.
lot of cases, the parent is still providing the care. Man, that doesn't mean, so a good example would be, that doesn't mean a dependent who's all away for school, just away for school, just to be away from school. And they might get, like, a small apartment that really serves as a dorm, but you got an apartment. Just those types of things. In those cases, you're just temporarily away from home. Your family, your parents are really still providing your care. And just depends on, it's you got to be providing over 50% of your total living. And that's for the
Mm-hmm.
parent part
Or this.
or the dependent part. But they always still can file themselves, even if their parent is claiming them.
Mm-hmm.
They just have to check that someone else can claim them.
So that's good to know because a lot of people, I believe, assume, oh, I have a child that's in college, um, so I can claim them. But what you're saying is, if that child is working and paying their own bills or paying for more than 50% of their living expenses, you may not need to claim them anymore because they may
Right,
need to get the benefit of claiming themselves. And so
right.
that brings me to a question we have here. Hi, Lamont. Welcome to the show. He got so excited he asked this question and then was like, oh, my bad. Good evening, ladies. Um, so, Lamont's question is, what is the best way to ensure that you do not owe? Is it how you file, like single, head of household, or no dependents? Like, what's your thoughts there?
So one thing I want to say, and just because he threw up the single or head of
Mm-hmm.
household, so for IRS purposes, you are not a head of household if you do not have a qualifying dependent. So
Mm.
some people might think when they filling out their W-4 form, which I never thought about this until we just said it now. When they're filling out their W-4 form, they might actually think they're head of the household because they pay their own bills, right?
Mm-hmm.
But you're not head of household, you're single.
Mm.
Yeah, a lot of people probably is doing it now that I think about that.
Yeah.
Yeah. So you're not head of your household. You're single because you don't have any dependents.
Dependents that
And
you're
right.
claiming.
And if you select head of household instead of single, then they're gonna withhold your withholding based off the head of household balance status versus the single
Single.
balance status. And for every balance status, there's a standard deduction amount attached to it, and the head of household standard deduction amount is way higher than the single person. So, and when you're doing head of household, you got to also think about the fact that they're putting into perspective that you have a dependent because,
You're gonna
right?
claim it, right? Mm-hmm.
Right. So then they still might not be withholding enough taxes. So for a single person, you should just be single.
That's it.
Period. I don't suggest like single people like you put absolutely nothing. Now the old W-4 form as a single person, you was able to put 0 or 1. Well, if
Mm-hmm.
you do 0 or 1, you still was kind of safe, right? But in most cases, single people might have put 1 or 2 and they really 0, because you don't have any dependents. And then the other problem with that is, as a single person, Lamont, do you have another source of income, right? Because I'll use this as an example because I don't see so much this has either. My older people who get Social Security, right? In their minds, they think their Social Security is not taxable because that's one of the myths that goes around here. Your Social Security is not taxable. But if you make a certain amount of income, then your Social Security is taxable. And so a lot of older people have retirement income.
Mm-hmm.
And the retirement income might be over the amount that you're required to stay under for your Social Security not to get taxed. So, do you have how many sources of income do you
Do you
have,
have?
and what kind of did you indicate that, like we said at the beginning of the show, did you indicate that on both of your W-4 forms? Because what I have to tell my older people that are in those situations, unfortunately, I know you don't want your Social Security tax, but you need to go talk to the Social Security Administration and have voluntary federal taxes withheld, because once you put your retirement income and your Social Security together, you're in another tax
Over
bracket.
the thing. Wow. So you just said a whole lot. So let me recap for those who may just be joining. So, Lamont, to answer your question, you should not be filing head of household if you're not going to claim any dependents on your taxes. Just because you are single and you pay all your bills doesn't make you the head of household, because you are being taxed on the presumption that you're going to claim a dependent when you file your taxes. And then when you file your taxes as head of household and you don't have any dependents on there, they're going to say, "Well, we didn't tax him enough. We thought he was taking care of somebody else and he's not." Then you may end up owing. So if you're single, just be single. And if you're single, report all your income so that you're paying the right amount of money on all of your income, including Social Security, which is taxable, which is crazy because I'm paying taxes now for Social Security, right? So that when I retire, I get it.
Well, you paying taxes for Social Security so that you can get Social Security. That's a
But
whole nother conversation. Okay.
but then I got to pay taxes once I get it.
Because that's a very important conversation when you're
Mhm.
talking about small business owners. That's something that we don't understand and take lightly as well. So,
Mhm.
as small business owners, what we do is we come into the tax companies and we want to have 1,000 expenses because we want to pay the less amount of taxes that we possibly can need to pay. But what ends up happening when you get old, I don't know if Social Security is going to still be around or not,
I know,
but
right?
right, but if it is, you would have spent your life being an entrepreneur, and you would not have been paying a lot into Social Security taxes. And so when it's time for you to retire, you don't have enough money in to even get a
Get
lot right.
back. So Social
Yeah.
Security is based off of what you paid while you were working to determine what you get. But hey, Samara, she's joined us. She says facts. Social Security can be taxed up to 85% of Social Security income. So, Samara's a tax expert as well. So thank you for that. But that's definitely something that a lot of people aren't talking about.
They don't talk about it, and that's literally my mission, right? Because we so many people do taxes, and they do not focus on educating at all. They
Mm,
only focus on the tax preparation portion of it. And as a especially a black community, when we talk about financial literacy, nobody talks about
tax.
this part of taxes. The only part of taxes they want to talk about is, oh, can I write my Lambo off, or can I write my trip off, or can I write this off? But we don't have the conversations about how do our taxes really affect our everyday living. Like,
Mhm.
how is it going to affect us longevity?
Mhm.
We trying to avoid to pay taxes, which of course everybody want to do that. I don't blame you. Yeah,
Mhm.
right.
Mhm.
But is it in your best interest to do that though?
Right. Right.
So it's those things that I feel like we need to have more conversations about. As tax pros, we should be more proactive to be able
Mhm.
to spread the word, because unfortunately, the IRS is not good at educating us. So if you want to
Mhm.
be honest with you, like, you got to go out here and dig for this information.
Mhm.
And so I just feel like it's just real important for us, again, as a community, especially small business owners, especially with so many people becoming small business owners, so
Mhm.
many people having to turn to open businesses to survive, and now that we need to start having these conversations.
Absolutely. I totally agree. Because you even see, once you start making money, you know how many celebrities we've seen get in trouble because of tax evasion or, not paying taxes. And it's because we're not taught that this isn't something that's a topic in school, right? And I think you bring out a very good point, which is why I'm glad that we can talk about it tonight, because our goal, like yours, is just to make sure that we're not paying unnecessarily and that we're not in jail for not paying, and that we can retire and know how to do that with the proper amount of finances because we did what we were supposed to do while we were working. So we do have another question here. Hi, Melissa. Thank you for joining tonight. So she wants to know, as an independent contractor, 1099 employee, or self employed person, is there a good resource for knowing what kind of things you can appropriately deduct, such as like your if you have a home office, your mileage, etc., and what's the best way to track these expenses throughout the year to be ready to file your taxes? So, definitely feel free to chime in, Samara, and Dr. Gwen as well. But I do want to say to Melissa, we did touch on the last part of that about the way to track your expenses, because record keeping is a big issue that she's seen this year. And the answer was either do an old school Excel spreadsheet, but you want to track anything or any expense that was used for the business, is what she said. And if you use QuickBooks or anything like that, you can see if they have a means to track it. Otherwise, I'm gonna turn it over to you, Dr. Gwen. If what other things should they be look? Can they deduct the home office mileage and things like that?
These questions are kind of they're crazy, right?
Uh,
People think I be like too technical with it. I go to a lot of Irish forums. I just read a lot of things, and when it comes to the home office, yes, you can write off your home office. But this is the part of the home office part that people really need to understand. Right. You can't just say, I got a desk in my home and I work it sometimes and that's my home office. Or because I work from home on my couch, that's my home office. Like, in order to take the home office deduction, and if you was audited by the IRS and they wanted, those particular records for you to prove that, your home has to be is has to be definitely restricted for your business. And what I've heard the IRS says, that means that if your business is not a daycare, that particular space that you're saying is your home office, you don't even supposed to have a toy in it. You know what I'm saying?
mm,
Because it's supposed to be exclusively used for your business. That don't mean that at nighttime someone can go in and sleep on the floor in there. It has to be exclusively used for your business. And then with the home office deduction, ultimately it's different portions and percentage that are calculated based off the square footage and different things in order for you to take that particular deduction. Now,
mm,
I do want to say the thing about the mileage, like people get that confused as well. So people think that like when you are writing off miles for your business, that you you leaving your house and going to your business location every day, that you can write off those miles. When it comes to writing off miles for your business in the IRS eyes, that is called commuting. That's just like you going from home to your job. Now, if you go to your business and then you go to another location or offsite thing for your business, then those miles you can calculate. If you go run errands for your business or go to a business meeting at another location, then you can write off those miles. If you go drive to meet a client or a customer, then you can write off your miles. But writing off miles is not, I wake up every morning, I go to my business, and every day I'm going to write those miles out. If you
mm.
was audited by the IRS, you would not win that audit or portion of that as far as miles go. The other
Wow.
thing that people need to know is that when you are writing off miles for your business, you have to choose between the actual expense or the standard deduction, a standard expense, when it comes to your car expenses. So you cannot write off mileage for your business and then think you can write off the depreciation of your car or the repairs or the car insurance. You
Mm.
got to choose one or the other. So it's just a lot
Wow.
of things, like I said before, like people do the clickbait thing on like TikTok and Facebook and all these different places and say, oh, you can write this off, and oh, you can write this off, and
Mm-mm.
oh, you can write this off. But for everything that you are writing off, there are rules to it, and you have to understand what those rules are, because in the event of the audit, those are the things that the IRS are going to ask you.
Wow. And the mileage thing, that it's similar. If you've ever had to travel for work, you notice, like you said, they don't pay you to go from home to the office, the job. But if you're once you're at work and they say, "Hey, we're having an off-site meeting," then those miles you can claim. So it works the same as a self-employed.
Yes, but you can't do that anymore.
You
That's
can't
what
do it anymore.
people need to know that
Mm,
too. So when you go to a tax pro and a tax pro asks you, did you drive to and from work every day, or did you
mm-hmm.
have mileage for work? That was taken away about 3, 4 years ago. And that was utilized when you were able to itemize for unreimbursed employee expenses. Well, unfortunately, about 3 years ago, I think about 3, 4 years ago, they took that off of that particular form. So people are not allowed to write off mileage if you are an employee. I think military
Wow.
people might still can, and it's maybe one more other profession, but for the most part, most employees no longer can write off miles.
Expensive. Wow. So if you have your own business, but you still work for a corporation or another, like an employer, you can't write off those expenses.
What year?
Wow.
Yeah, it was. Yeah, okay. It was tech. Yep, a couple years.
Okay. Yep. Samara says it was taken away in 2018. So,
Mm-hmm.
Melissa, if you are still working for an employer and operating your own business, you can't,
Well, that's not.
unfortunately. Right?
They can take miles for their business, but remember, it just has to be specific types of miles.
For
But
the
they, if they
specific
work,
types.
yeah, yeah. But as an employee,
You
you
can't.
cannot.
Wow. Military can. Okay, so military still can do it. Okay. Woo, y'all got my head hurting. I told you at the beginning. This math, taxes, money, all of this is so necessary. To your point earlier. So, any closing thoughts or advice that you want to share? Because our time is just about up, but I want to give you an opportunity to share any last minute thoughts that you want to share.
So my thing is just, for my small business owner, let's make 2023 the start of us being educated about our finances,
Mhm.
because as small business owners, it's so important for us to know what our bottom line is, so that one, that we can go to different levels in our business, so that we can gain different types of capital from other people to grow our business. But if we're not filing our taxes correctly,
Mhm.
right, then we're not able to benefit from those things. And I go all the way back to COVID, when all these different types of loans were out. So many true business owners couldn't take advantage of it because their numbers and paperwork was not together. So let's not just stop looking at the pretty things of a business, and let's get to understanding some of the ugly things that we don't want to talk about in business, so that we can make sure that we're growing our business to the best of our to our benefit, and that we're getting the revenue that we need inside of our
Mhm.
businesses. And y'all asked about like how to keep track of your business expenses. So I have a money planner that I made for small business owners. It's called My Money Planner. And in that planner, you can track your business expenses and income daily, monthly, and yearly. And it also tells you and give you some information of the understanding of your tax obligations as a small business owner. Plus, it do helps you understand some of the write-offs and expenses that you can actually take in your business. You can get that planner on my website at www.xperttaxservices.com, Or I have a website just for the planner where you can buy a hard copy or a digital copy, and that's at www.mymoneyplanner.info.
Love, love, love. Look at you being a solution. Um, if you guys follow me on Instagram, I've tagged her, in today's post. So go connect with her, visit her website, give us that website one more time. And the X is just the letter X, right? When you say,
Correct,
okay.
correct,
Okay.
correct, correct.
So give it
Yes.
to us one more time.
So you can go to my website at www.x, spell with the X, I mean
Mm-hmm.
Xpert Tax Services.com. So it's spelled with the S, it
Mm-hmm.
ends with the S.com. And even if you want to like pick my brain to understand your particular tax situation, we do consultations. I do pick my brain. And
Mm-hmm.
then I have other ebooks that can help you also on my site, how to build your business credit, how to understand your business taxes. So it's different informational things that you can purchase on the site as well.
Love, love, love. And I'm gonna tell everybody, like I tell people that I work with in HR, you know, be okay with investing in yourself and in your business and hire a professional. If you know this is not your swim lane, time is a precious commodity. Hire somebody, consult with somebody, get assistance now versus having to pay somebody to clean it up later. Because I guarantee you, her strategy session or pick my brain session is going to be a lot more affordable than I owe X amount of money. Can you help me clean up and figure out what I did wrong about? So be proactive and invest in yourself. Do not be afraid to do that, because if you don't invest in you, why would anybody else want to?
Absolutely.
So,
Yeah.
thank you so much, Dr. Gwen, for being here. You guys make sure you go visit her website and follow her on social media. Let's connect. Let's make her feel welcome and good about spending an hour with us tonight because we know you could be doing so many other things. And we are so happy that you are here with us. And I just wanted to appreciate you. And we're going to do that episode about Social Security because I need to understand that a little bit better too. And I'm pretty sure other people do as well.
Anytime, if you want to come, you want to come back and talk quarterly to remind them, get your stuff together. Okay,
Get it
I'm there.
together. We can be your accountability, team here. And then we got to invite Samara along for the party and, do what we need to do to get us right financially because other people get it from generations to generation to generation. And we are just now at the opportunity where we're even allowed to. So
Right.
we got to get it right, you guys. We got to care about what our financial future looks like. And this is the start of that. So thank you again, Dr. Gwen. I'm just going to have you
Thank
go
you
to the
for having
back and
me.
then I'm going to close out the show. So thank you guys again for watching. I know it's not our typical HR show, but it's definitely a necessary conversation, a necessary topic. We want you to be a well-informed employee when you are filling out your W-4 form, doing it the right way, filing it the right way. As a small business owner, make sure that you are reporting your income quarterly with the Department of Revenue. And if you're not record keeping right now, approximate how much your revenue is so that you're not having to owe at the end of the year or next year at the beginning when you file your taxes. And if you have QuickBooks or any other tracking software that you send your invoices out and things like that, it may help you track what you're spending to help you truly understand what you're making as a business. Because if what you're making is not exceeding what you're spending, then you're really not being profitable. And the only way to know that is to track what you're spending and what you're receiving. So I want to encourage you all to take your finances seriously. And lastly, check out Dr. Gwennetta Wright's information. Go to her website, www.xpert. Oh, I forgot it already. But look, I'm going to put it on the description. And if you go to my HR plug Instagram at the HR plug, she's tagged in tonight's post. Go connect with her. Tell her how much this episode meant to you. And lastly, my last favor, subscribe to the YouTube channel if you haven't already. Let me know you enjoyed this episode. Ask your questions below. Let us know what we can do to bring you content that matters, because that's why we're here. Thank you so much for tuning into the HR Plug podcast tonight. And we will be back next Thursday at 8 p.m. for a new episode. Until that time, take care of yourself. Have a good one.